Hello guys, hello traders, welcome back to the channel. Welcome back to another video. So in this video we are going to be reviewing three of our previously called out trades. Now we had, you remember in the previous videos I called out a trade on Euro NZD, and then we had another one on GBP NZD, and then another one on AUD JPY. I think that is the last video that I made for AUD JPY. So I'm going to be reviewing these trades such that we can see how they are currently performing. Also stick out up to the end. I'm going to be showing you exactly how I was able to forecast these trades, how I got the setups, and why I do believe that the setups were valid and were prone to working out. So stick out throughout the trade and then throughout the video, and then you'll be going to be learning how to identify and execute those trades. So my name is Hassan and welcome back to my trading channel. This is a trading channel where I have a like-minded community of traders, and also looking forward to growing together. We're currently at 500 subscribers and we're heading to 600. So if you're not part of the channel yet, kindly consider subscribing, especially after getting value from these videos. So without wasting any time, I'm going to go straight into the charts and I show you what we're expecting and how the trades are playing out so far. So this is Euro NZD, and this is the 4 hours time frame. As you can see, the setup is clear cut, very clear and straight. However, we were not triggered in. So now someone will ask, how do you identify the setups? That is what I'm going to go straight into. So I'll just clear everything on the charts. Forgive my voice a little bit. It is too cold. So okay, so now I'll just clear everything on the chart. So we'll first start with the direction of the market. Remember, the setups are simple. If you look at my previous videos about setups, these are the same setups that I use each and every day, and you can check through the track record. You'll see that you'll find the same setups that I use each and every day. Some do work out, sometimes they do not work out because the market is always changing, but in the long run they're always playing out. So now the market was going up, it was having an uptrend. If you look at this one clearly, you would see an uptrend. So we have a higher low, higher low, and then market entered a little bit phase of consolidation. Inside here it gave us a lot of good trades, like this one here, it was a good trade, and also another trade here. So market has been consolidating, then it finally made another higher high. So this high, this last swing high, is lower than this swing high, so it made another higher high and didn't stop there. It made a higher low and then made another higher high, meaning that market was proceeding in an uptrend direction. So what do you do? If you're trading the same strategy as me, supply and demand, you start looking out for areas of demand to buy from. Where are we looking out for areas of demand to buy from? Because the market is in an uptrend. So where do you see areas of demand? First, we see two areas. There is an area here of demand there, and then there is another area of demand here. So we have two areas of demand there. Now, which one is the valid area to buy from? Simple for me. You see, after the price broke this structure here and went to the upside, the valid area to buy from was this one, because this was a drop, a base, a rally, good move away, valid area of demand. So price, after ranging up this moment, if it was to buy, it was supposed to come back and buy from this area and go up. However, it did not come back down because it bought from this mini demand zone here. So that mini demand zone down there, this is not a zone I would buy from. Really, this is not a zone I would buy from, especially after seeing this solid move down here. I would be expecting to buy from down. However, price wanted to buy from this area immediately, and it is also a valid area, just like the move away is not that concrete like you see the one down here. And also I would expect this area to be used as liquidity for price to come and pick orders down here. However, it did not come down here, so it decided to buy from here and went up aggressively, which is okay. So now after seeing that, the only zone I'm remaining with is this one, and this zone also has a previous area of resistance that was broken, which is going to turn into support. So this was already area to buy from. Let me just mark the resistance that will turn into support. People trade support and resistance. So you combine this with demand and supply, and then you get a high probability zone to buy from. So this is going to be my entry, and then the target is going to be the previous high. However, what happened with this trade is that price retraced very well, but it did not tap into the zone. So what happens if it doesn't tap into the zone? You do not panic, you do not rush, you just ignore the trade and look for another setup. Because if you might want to panic and buy from here, because now price did not reach into the zone and you need to want to reach there, so you buy from here. So what will happen is price will put you into some profits, and then maybe it wants to come and fulfill the orders here, and then it will retrace back, tap into the order. By this time, by the time it taps into the our orders down here, you would be stopped out at around here, because your stop loss would be around here. So you would be stopped out, and then price proceeds to the direction. Remember, if price never comes back to your zone, do not chase the market, just let it go and look for another setup. If it comes back, execute the trade. If it doesn't, just look for another setup. So that was Euro NZD. So we are going to proceed to another trade, that is GBP NZD. Now GBP NZD, this is a trade that worked out. Okay, it hasn't worked out yet, but it is currently in profits. If we can stretch this to here where price action is, it is around 27 pips in profit. So if you already hit the first level target, you would have removed some of your positions, secured them, and knowing that even if price goes against you now, you're still in some profit. So I'll just delete everything on the chart like I did in the first trade, and then take you through the whole thing. So price was in an uptrend, making higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So in an uptrend, we are looking to buy, because we all know that it is only logical to trade with the trend. However, while trading with the trend, how do we take advantage of this? You just don't buy because you're an uptrend. You identify demand zones. Those are the cheap areas to buy from. So now we had two demand zones, just like we had on Euro NZD, GBP NZD also we had two demand zone. So that's the reason that's why I tell you in an uptrend we buy, but we don't just buy from anywhere. Just imagine we are in an uptrend, and then people who bought from here, what do you think their stop loss would be? It had to be down here, the same as people who bought from here. So why don't you just wait for price to come back to your zone, as long as you have identified the value zone, and then buy from that zone? Because I think that is better than buying from up here. So people bought from here probably was stopped out around here, and then price proceeded to the downside. So when it reached the demand zone, it has now reacted. So we had two zones, one here, also a very valid zone. There is resistance that is turned into support, 2, 3 indecision candles, 1 engulfing candle, and then another one. Very good move. This was a very good zone. In fact, these are one of those perfect zones that I would want to buy from. And then price did not turn back to this zone, never bought from anywhere, just proceeded to the upside, and it left us another zone here. Good, which is a perfect zone. So how your entries going to be? Entries are going to be like this. I told you stop losses are always slightly below, so you'd put it here and then stretch it slightly below, around 55 pips. It has to be slightly below, but it has to be reasonable. Don't just put it below too far or anyhow. So your target should be the previous high, which is that one. That is a 1:4, 264 pips. So far we are in the process of around 27 pips. First level target removed, because price can turn against you, wanting to come and test from this zone. And one wise person would ask, Why are you not using the zone behind here and use this as liquidity, but choose to use the upper zone? Now, in the other uptrend, we are looking for buys, and we have higher highs and higher lows. So that means if we have this as our higher high and this one is our higher low, that means this is our respected low. Price does not have to go below this zone. It can reach here, fine, but it doesn't have to go below this zone in order for us to keep a reasonable uptrend. It can still come below this side and then choose to go up, but that one will not be a reasonable uptrend. It would be a disorganized one that looks like a ranging market. An uptrend has to be high highs and high lows. That's why if you look down here, price was dropping down, making lower low, lower high, and then no, it made a higher high, then a lower low, then a lower high, then a lower low, a lower high, then a lower low. After making that lower low, it made a higher high, a higher high, breaking this previous structure, and then came to make like a head and shoulder here. If I put the line chart, it will be visible. You see, this is a shoulder, this is a head, this is another shoulder, and then price started going to the upside after making this QM. This is a low, high, lower low, higher high. Price now was supposed to react from this area, but reacted from around. There's a zone here. If I can mark, there's a hidden demand zone here. If I can mark this very well for it like this, and then we drop down to the 1 hour time frame, you're going to see that there's a hidden demand zone there. You see, guys, very clean hidden demand zone over rally, base, rally. You see that zone? So this is a low, a high, a lower low, a higher high, with this Marabozu candle breaking this previous structure. That signifies that we are going in an uptrend. So what is this, the reasonable area to buy from? It is this area here. This is this first demand zone here. You don't have to come down. You see, on the 1 hour down here there is nothing, but on the 4 hour you see a clear demand zone down here, but on the 1 hour there is nothing down here. So this is the area to buy from, and then start going up. Then when price started going up, you saw higher highs, higher low. We didn't break this low here, and then we ranged a little bit. Then we made another higher high and a higher low. We didn't break this low here or this low here, maintaining that rhythm. Then we made another higher high. We tried to come low, but we didn't break this low. You see, we didn't break this low, and then we made another high, another higher low, another high, another higher low, like that, proceeding to the upside, low, high, low, like that, proceeding to the upside. So if you're in an uptrend, the only reasonable thing that we are looking to do is to buy from these areas here, immediate areas in an uptrend. You don't need to drop further downside because price might not reach it. However, if you see like you have two zones here, it's always reasonable that you risk 1% here and then keep 1% to risk here in case this zone does not hold. Because think about it, if you are continuing with an uptrend, we're going to be using demand zones to buy. So that means price is going to proceed from either this area or this area. But the first area is always given priority, because why do we need to go up to here when we're in an uptrend? We shall just continue with the buying zone here. Do you mean to tell me that the buyers here do not have enough momentum when they made this huge move in this candle? Of course they do have. So we just proceed with that area. So that is all. Let's go to the last trade review. The last trade review that we have is NZD JPY. So AUD JPY. So AUD JPY, you see, it was making higher highs, higher lows, higher highs, higher low, equal high. Now, whenever you see equal highs in equal highs in an uptrend, just know that is a sign that price is losing momentum, or the buyers are losing momentum, and price is likely to drop. So after we saw equal highs, price dropped here a little bit, made a head and shoulder. After making a head and shoulder, bought up to this area here, where it got a supply zone, and it dropped massively. I want you guys to see this drop. There is a lot of candles in the middle here, but price moving from here up to here, it took only 3 candles. 1, 2, 3, and the more it dropped, the more price accelerated. Because there was a drop here, and then a big candle, Marabozu, and then a bigger candle, Marabozu, dropping, breaking this previous structure, and then after, price started retracing. So the ideal area to buy from is up here. The moment price started retracing, you knew that this is where to sell from. This is where the price was likely to sell from after dropping this huge move. And look at the way price dropped, guys. It was a sniper entry, and immediately price tapped into sniper entry. It dropped massively, giving a risk reward of 6 to 1, 200 pips, guys, 200 pips. Whereas the ideal target would be the previous low, which is 176 pips, and this is a 1:5. A 1:5. Price continued downside. Now, as price was dropping to the downside, it made higher highs, higher lows, higher highs, higher lows, higher highs, higher low, and then it made an equal high. Then did the same thing it did here. Left a supply zone here, and look at the drop. 1, 2, 3. Look at the candles, the movement from here up to here. How many candles are those? Let me count them for you. They are around 40 bars. Those are 40 candles. 40 candles from here up to here, 40 candles. But look at the movement from here up to here, almost the middle way of that price action. 1, 2, 3 candles, guys. 3 candles. And then after ranging a little bit, it dropped to 1, 2, 3, 4, 5, 6, 7. 7 candles, guys. That means the selling momentum is very high in that area. So now what do? There is a break of structure here. So we are just waiting for price action to come and tap into this area, and then we drop. Remember, I told you last week, price ended here. Now today it opened, tapped into the area, and immediately the next candle as red, price dropped. It dropped up to here, and now it is retracing. However, I don't expect this area to hold for long. We might see a drop up to around here or here, and then price might go upside or it might drop. But I don't expect this area to hold for long. Why? Because I always prefer the first break of structure. You see this one here, broke structure here. When price comes back to the zone, it is going to be a massive fall. So I always prefer the first break of structure over the second break of structures. Those ones, sometimes they work out, sometimes they don't. But you see that first break of structure, it is always almost guaranteed. So price moved us to profit of 26 pips. So far we have gone back to 7 pips. Okay, around 6 pips profit. However, we are still holding. We expect our first level take profit should be 1:2, 1:3. Yeah, 87 pips, and then we remove some of our positions and let the rest run to the downside, because I expect this price action to come and make a head and an inverted head and shoulder. If I can draw it here, something like that. This one will be the head, this will be the shoulder, and this one also would be the shoulder. That is what I'm expecting, and then price might go to the upside. However, something else can happen. So guys, that is all. I think if you have learned something from the video, kindly subscribe to the channel. Also like the video for the algorithm. So for now, I'll end there. You can always rewatch these videos again. If you have not understood well, you're always going to get good feedback out of them. That is all for today. We meet again in another video. Bye.